Well, what is going on, guys? Luke here today, and let's talk about why are so many earnings beats sending stocks down. I mean, it happened to Tesla, it happened to Apple, and a whole bunch of others as well. There is actually a reason behind it, and there is more to it than just Wall Street hates my stocks. And it's imperative you understand this so you know what is coming next, and you don't get too frustrated and make some bad decisions instead of making the right decisions that will allow you to make a lot of money instead. So I will tell you why these stocks are trading down and receiving an earnings beat down, why it's troubling, and what my game plan is to make money off the trouble. And all I ask for in return is for you to gently tap that like button and subscribe if you haven't already. You know, if you like the truth without the hype. And make sure you check out my new website that houses the Market Insiders private group, which has free access to 3 courses, and there's a 4th one on the way. You see all my moves in real time and a ton more that I will discuss at the end of this video for a price that is less than a cheap date at McDonald's. I mean, seriously, you can take $700 worth of courses and then cancel, and it's like getting a 97% discount or something like that. So check out the first link in the description and the pinned comment. So Apple followed up with what was an all-time great earnings call last time with yet another all-time great earnings call. I mean, seriously, it just doesn't get any better all the way around. And how did Wall Street greet this? With the stock immediately getting beaten down. Tesla had its best quarter ever, and it was seriously impressive all the way around, and even the perma-bears, and you guys know who I'm talking about, who complain about Tesla being propped up by regulatory credits, had really nothing they could harp on this time. It was nothing short of spectacular, and it's not like Tesla had gone on a massive run ahead of time before their earnings. It had been relatively flat, so you cannot even argue that a great earnings call was already baked in. But Tesla just got hammered the next day almost immediately. Facebook, and ditto, same thing happened. And lots of other large caps got the beat down as well. Does Wall Street actually hate great earnings? Are they drunk? Well, maybe, but what is their problem? Actually, Wall Street does not hate great earnings. I mean, they hate lots of things, but not great earnings, so you have to dig a little bit deeper. And when you do, you find out there is one thing that all of these earnings calls had in common. And that is that guidance was either lowered or not clear at all, and that is exactly what investors are hyper focused on, and let me explain why. The question on everybody's mind a year ago was, how well are you going to do in this pandemic? And now every company that has thrived through the pandemic is now being asked, can you keep it up moving forward with so much future demand being pulled forward, into the now? That's a valid question, and most of these companies acknowledged it by basically saying there would be some slowing of growth. Now that does not mean negative growth or anything like that, just not the insane growth we have seen over the past year. And you mix that in with the stocks being at close to all-time highs and the indexes all being at or near all-time highs, and it kind of creates a scenario where everything is priced in, and only a perfect earnings combined with guidance that is even more robust than what the companies are already performing at would push the price higher. And that's what is so troubling. These are the signs that the market is exhausted, and the big dogs, and I mean the huge winners, are all basically saying things are going to cool off a little bit from the insane levels over the past year.
Oh no! That means Michael Burry was right. The market is going to collapse. Sell now! Hide until the crash is over! Ah!
Really? This is the exact narrative that is going to allow you to take advantage of the huge opportunities in front of you, and why I'm personally so excited. What is happening right now was honestly expected. As we've discussed on this channel now for many months, there was going to be a rotation from large caps back into small caps as the small cap stocks have gone from overvalued to basically in line with historical valuations, and some of them are actually undervalued. And large cap stocks are in significantly overvalued territory now. And the time to buy large caps like Apple was last year and the beginning of this year. But that was when people were busy buying Palantir at $40 and Lucid at $60 and NIO at $60 and a bunch of others at all-time highs. And trust me, I know it's hard to resist when everything is going to the moon until it wasn't going to the moon anymore. And now the script is kind of flipped and large caps are in the same situation. But there is one key difference you have to understand. You will not see Apple or Facebook or any of those other large cap stocks drop 50% or more like you saw small caps do during the spring and then the beginning of the summer. Beginning of the summer, I'm sorry. Growth stocks swing wildly up and down, but the moves in those giant companies will not be as large. I mean, trust me, I would love to get a 50% discount on those stocks, But even a global shutdown could not give us a 50% discount on those stocks. However, Wall Street always overreacts both up and down, so for those that do their due diligence, they will be able to identify when that overreaction swings to the downside and will be able to pick up some incredible companies at really honestly a cheap price. I was super excited in the spring when all of our favorite growth stocks were going down, and so was our Discord. I mean, seriously, every red day was like Christmas, and green days, they were basically kind of poo-pooed on because we could not build out our positions anymore. We wanted more red days. But I'm excited now because not only can I continue to add great growth stocks at very attractive prices, the time is also coming soon where stocks like Apple and Facebook will also be at very attractive valuations again, and also a lot of other stocks like value plays or dividend plays as well will come back to a normal valuation. This is why due diligence and having a plan is so important, so you do not get caught up in the emotion of the movements of the market. When you do your due diligence and you have a plan, no matter what the market does, every situation is a win-win for you, and you too can enjoy Christmas all year round. And if you don't have a defined plan for all your stocks, or you don't know how to create a plan or value a stock, we can help you with your planning, as there is a course in the Market Insiders private group dedicated to that, along with creating an infinite money loop and other courses available as well, along with live weekly Q&As where you can ask me absolutely anything, a super great Discord group, tons of exclusive videos, downloads, and more, all for the price of a meal for two at McDonald's. Considered it a cheap date that went really well. So check that out. It's the first link in the description in the pinned comment. So thanks for watching, and we'll see you in the next one.